Hi everyone, my name is Olude Rejas. I want to welcome you to my YouTube channel where we discuss accounting, debit and credit. So this video is a continuation of the previous section on source document and subsidiary of accounting. In our previous video we discussed the sales table and we did the calculation on it. Now today's video we are going to be considering purchase table, return outward table, return inward table. But for these other two, the general journal and cash book, we're going to be discussing those two subsequent sessions. So if you know you have not gone through the previous video, please kindly do that before you proceed to this video so that you have a good understanding of the topic. So let's get started. Okay, so far we have looked at bookkeeping and accounting, then the principles of double entry. Then today we are going to be looking at the subsidiary books of accounts. Okay, like I said, the subsidiary books. So we have the subsidiary books are divided into 6. Like we said in our last section, we have the sales day book or the sales journal, which are treated in our previous video. So we have the purchase day book and purchase journal or purchase journal. Then the sales return or sales return inward journal. Then we have the purchase return or return outward journal. Then the general journal or principal journal, or we can also call it a journal proper. And the cash book. These last two, like I said, we are going to discuss them in our subsequent video. Okay, now let's consider the purchase day book or purchase journal. So only item bought on credit should appear under the purchase day book. Only item bought on credit should appear here. Item bought with immediate payment with cash should not appear under purchase table. Also note, fixed assets bought on credit should not appear under purchase table. Fixed assets should not appear under purchase table. So let's continue. This is the how the purchase day would look like. We have the date, particular, folio, then details, then we have the total. Then after recording all the transactions bought on credit under the purchase day book, the total of purchase day book will be posted to the debit side of the purchase account, the general ledger, and personal account credited. That will complete the double entry principle. That means for the purchase day book, just note that purchase day book always have a debit balance. As we said also in a previous video, that sales day book always have a credit balance. We also discussed discount in our last video. Those who are buying for, they can also give us a trade discount. Trade discount because you are buying in bulk, give us a trade discount. Okay, now let's look at the purchase return or return outward day book. We also call it a return outward journal. This one is used to track or record goods returned back to the supplier, maybe because they did not meet up with your specification or the color or what have you. Have your own reasons. So they decided to return the goods back to the supplier. Such transactions have to be recorded under the purchase return. So the same commands, we have return outward table, date, particular, folio, detail, and then total. Then all the total of the return outward table will be posted to the credit side of the return outward account in the general ledger and personal account debited. Okay, now let's consider this example. Enter the following transaction of Revolut venture in the day books for the month of December 2024 and post to the ledger. So December 1st, 2024, bought from Delta PLC on credit 20 crates of Pepsi at 1,000 naira each, 15 gallons of palm oil at 900 naira each. Then on the 17th of December, bought from Zoro Limited on credit 200 bags of corns at 1,000 naira each. Then 2,000 tubers of yam at 500 naira each. Then trade discount of at 20%. Then December 29, 2024, return 10 crates of Pepsi to Delta PLC. Then December 29, 2024, return 100 tubers of yam to Zoro Limited. So let's solve this. Okay, now let's solve the question. Because the December 1st, 2024, bought from Delta PLC on credit 20 crates of Pepsi, then 15 gallons of oil. So before now, I had already prepared the books of accounts for me to open. You have the purchase day book, return outward day book, then the account which you are supposed to maintain for these transactions. So the first one said 20 on the 1st of December 2024. We bought from Delta PLC. We have to capture the name of Delta PLC here because we are buying from them on credit. So we have 20 crates of Pepsi at 1,000 naira each. So we have 20 times 1,000 will give us 20,000. So the next transaction for that day is 15 gallons of palm oil at 900 naira each. We recorded the 15 gallons of palm oil at 900 naira each. 15 times 900 will give us 13,500. So that is that for that day. We'll add the two together, bring it out to 3,500. The next transaction here is bought from Zoro Limited on credit. So please take note. These ones are going to purchase double because we bought on credit. So on the 17th of December, we come here 17th of December on Zoro Limited. We bought 200 bags of corn at 1,000 each. 200 bags of corn at 1,000 each. So 200 times 1,000 will give us 200,000. Then 2,000 tubers of yam at 500 naira each. 2,000 tubers of yam at 500 naira each. That will give us 2,000 times 500 will give us 1 million. 1 million. So we add it together, we have 1,200. If you come down here, the next line item there says trade discount at 20%. We are giving trade discount probably because we are buying in bulk. So 20% of this amount, that is 20 over 100 times 1.2 million will give us 240,000. So you subtract the 240,000 from 1.2 will give us 960,000 naira. This amount we are owing Zoro Limited are not 1,200 because of the 240,000 naira they gave to us as discount. So add it together, 3,500 plus 960,000 naira will give us 903,500 naira. So let's continue. So we have the December 29th, 2024, return 10 crates of Pepsi to Delta PLC. If you can see from the first year before, we bought from Delta PLC 20 crates of Pepsi, but now we are returning back to Delta PLC. Probably because the item or the Pepsi are damaged or what have you. So this one is going to return outward because we are giving out the goods. This one went to purchase it because we bought on credit. Now we are returning back to Delta PLC, so we're going to return outward day book. So we'll go to return outward day book, 29th of 12, 2024, Delta PLC, which is the company we are returning back to. So I have 10 crates of Pepsi at 1,000 naira each. 10 crates of Pepsi, how do I know it's 1,000? If you go out on the first, you see that it was 1,000 naira. 10 crates of Pepsi at 1,000 naira each. So 10 times 1,000, that will give us 10,000. That's the transaction for that day. You add it up and bring it back to the total column. So the next one says return 1,000 tubers of yam to Zoro Limited. Initially on the 17th, we bought 2,000 tubers of yam. Now we are returning 1,000 tubers of yam back to Zoro probably because they are bad. But I also recognize that there was a 20% discount they gave to us when we bought initially. So when you are recording this transaction, also you need to deduct the 20% discount that was given to you. So you have 1,000 tubers of yarn, 1,000 tubers of yarn, 1,000 tubers of yarn, yeah, 1,000 tubers of yarn as 500 each. That will give us a 500,000 naira. So let's remove the 20% discount that was given to us before. 20% of 500,000 will give us a 100,000 naira. So 500 minus 100,000 gives us 400,000 naira. So that is all. So add, we go back to the question, that's the end of the question. So we add up the two, 10,000 plus 400,000 giving us 410,000 naira. This amount you are going to transfer to return outward account in the ledger, and for the purchase account you're going to transfer now 3,500 naira to the purchase account. So let's do that now. Let's go to purchase account here. Purchase account, being that we are receiving the goods, we're going to debit purchase account with this amount. Why are we debiting purchase account with this amount? Because the budgetary principle states that we should debit the receiver and credit the giver. Now we are doing receiving into our purchase account, into our warehouse, so we are going to debit our purchase account. Then what about the other leg? Then credit the giver. Who is giving out? Delta PLC and Unozuru Limited are the ones giving out. So go to Delta PLC account and credit it with the amount we bought from Delta PLC. We have narration here, purchase. How much was it? 33,500. So go to Unozuru account also. How much are you crediting the Unozuru account? You're crediting the Unozuru account 1.2 million. No, not 1.2 million. Rather, we are crediting 960,000. Why are we crediting 960,000 and not 1.2 million? It's because he gave us a discount of 240,000 naira. So these two, add these two together, this amount and this amount together will give us 903,000 naira, which fulfill the budgetary principle. So to return outward account, going to transfer 410,000 to return outward account. Why are we transferring this amount? Because which part of the account are we going to debit return outward account or credit return outward account? Going by the principle, credit the giver and debit the receiver. Now we are going giving out. If we are giving out, somebody is going to receive it. If we give out, the supplier is going to receive the goods. So now return outward account is going to have a credit balance because we are giving out. This our account is giving out 410,000 naira, amount of money. So who is receiving this 410,000 naira? This Delta PLC and Unozuru Limited. They're the one receiving, so it's going to go to their debit side. 29th of 12, 2024, return outward, referencing return outward. You have here how much? 10,000. That 10,000 will reduce our indebtedness to Delta PLC. The second one is Unozuru Limited. How much is going there? 400,000 naira. You have here Unozuru, date, return outward, return outward. How much is it? 400,000 naira. This fulfills the documentary principle also. 410,000, then debit side 400,000 and 10,000 naira. So that is that for the question. We are done with the question. They say we just post the ledger. They say we should balance the ledger. We do that when we get to the principal book, which is the ledger. Please take note also, like I said in the previous video, that the 20% discount, the trade discount life cycle ends with the day book. It doesn't go past the day book. It doesn't proceed to the ledger. As you can see from here, there is no mention of discount in the ledger, in the account at all. So that is that. If you have any question, please endeavor to drop it on the comment section and you will be given attention. Thank you. Okay, we have finally come to the end of today's lecture on subsidiary books of accounts. Let's just take a quick recap on what we have learned so far. So subsidiary books of account, they are books of original entry or books of prime entry. Every transaction first finds itself in the subsidiary book of account before they find their way to the ledger. We discussed the sales day book, purchase day book, return inward day book, return outward day book. Then for cash book and journal proper, so we are going to treat those two in our subsequent video. So I want to really appreciate everyone that has subscribed to this YouTube channel. And for those who are yet to subscribe, please kindly do so by clicking on the subscription button below. By doing so, you'll be among the first persons that will see notification for every video drop here. And in our next video, we are going to be considering a new topic. We're going to be considering the principal book, which is the ledger. See you there.